Hey, this is Mark from Caliber Home Loans. Today I'd like to talk about a theme that's kind of running through my industry. There's a mounting fear that the amount of forbearances and the amount of unemployment is going to result in a large amount of foreclosures down the line and cause home values to drop and kind of put us back where we were in 2008, 2009. So I want to speak to that. So I'm going to start out with an article that Susie Orman wrote about a week and a half ago. So in this article, she says that people should wait till September, October to buy a house because in her mind, there's going to be a rash of foreclosures and lenders are going to start selling these houses for 50% on the dollar. So I don't know. I mean, this might be happening in New York where she is, but I don't see this happening in the Midwest or in Michigan where I'm at. So I'm not sure why she thinks this is the case. You know, she gives the example that you bought a house for $300,000 and your neighbor whose house is worth $300,000 goes into foreclosure and the bank sells it for $150,000 and your equity just dropped because your house is now worth half of what it was when you bought it. So that's not really how it works, and there's no reason in the world, even in a foreclosure situation, why the bank would sell a $300,000 house for $150,000. It makes no sense. So first, the lender and servicer isn't even able to begin a foreclosure until August 31st or to complete one that's already been started prior to March. You know, so that gives us we still have another month and a half before that happens. You know, the CARES Act and the guidance from Fannie Mae, Freddie Mac, FHA, VA, and Rural Development prohibit lenders and servicers from beginning a foreclosure against you or from finalizing a foreclosure judgment or sale. This protection began at the middle of March and extends at least to the end of August. You know, based on what's going on, we expect that to be stretched out and moved out a little bit. So I don't think that it's going to end at the end of August. Second, if you experience financial hardship due to the coronavirus pandemic, you have a right to request and obtain a forbearance for up to 180 days. At the end of those 180 days, if you still aren't back to work as a result of the virus, then you have the right to request an extension for an additional 180 days. So that puts you out a year. So worst case, or that they'll start foreclosures in a year. Now, not everybody's going to wait a year, but given a certain set of circumstances, you could be in forbearance for up to a year. You know, you got to contact the loan servicer. The homeowner's got to contact the loan servicer to request this forbearance and to request any additional time. We can't charge fees or penalties or additional interest beyond the scheduled amounts onto your account. And once you come out of forbearance, the lenders are going to work with you. The services are going to work with the homeowners to get them back on track, to work out some way to get the person back to paying, modify the loan so they can afford the payments and move on. Lenders do not want to foreclose. We learned our lesson in 2008, 2009. We are not looking at this to do a mass foreclosure so we can buy a bunch of real estate. We don't want to own real estate. That's not what we do for a living. You know, if you don't have a conventional mortgage or a government mortgage, you've got probably a portfolio loan, a jumbo loan, or something like that. You need to work with your individual servicer or lender, and they will explain to you what your options are. So here's an interesting fact that came out from Black Knight. They did a study, and they said of all active forbearances which are past due on their mortgage payment, 77% have at least 20% equity in their home. So the first thing that jumps out at you is, of all active forbearances which are past due. So believe it or not, there are quite a few people who are in forbearance that are still making their mortgage payment. The reason they went into forbearance, they requested forbearance, was just in case something happened, in case things got really bad, they could stop making their mortgage payment if they knew that everything would be good. The second number is 77% of those people have at least 20% equity in their home. That's staggering. I mean, to think that many people have at least 20%, and 90% of them have at least 10%. So that's a lot of equity out there. So this high level of equity provides options for the homeowners, for the government, for the policymakers, for the GSEs, for FHA, VA, rural development, for the investors, And the service is to help homeowners avoid downstream foreclosure activity and default-related losses. Again, the lenders do not want to foreclose if they don't have to. It's very expensive and it's very time-consuming. We don't want to own real estate. So almost 59% of all homes in America have at least 60% equity. That's a lot of equity. 42% of all homes are owned free and clear. That's when you think about it, that's a staggering amount of people that don't have a mortgage that own homes. And the average equity in a mortgage right now, or the equity in a mortgaged home, is $177,000. That's a lot of equity. That's going to differ between, whether you're in the Midwest or you're on the East Coast or West Coast. That number is going to shuffle around. As in everything real estate, it's based on location, location, location. So my comment is this. For those that are waiting for this mass foreclosures to happen, this is not 2008. We are not underwater with our mortgages. We are not falling 30% from our, in values. Values are going up, at least in the Midwest and in Michigan where I'm at. Values continue to go up. There's still a lot more buyers than there are sellers. And the law of supply and demand dictates that as long as there's more buyers than sellers, by and large, values are going to continue to go up. The level of appreciation may change, but values are going to continue to go up. So my question is, why would you, if you're a homeowner, why would you foreclose if you're sitting on equity when you can sell the house and walk away with a check? So the real purpose of this video is for those of us that are in the industry, whether we're realtors or loan officers, anybody who has a client base, who has friends, neighbors, relatives, anybody they know that they can reach out to and say, hey, how's it going? Has anything been affected? How's the family? Is there anything going on? If you find out that they're in forbearance or going into forbearance, this is a conversation that you need to have with them. As humans, we love to stick our head in the sand when bad news is coming. If you're in forbearance and you're not going to be able to get back to work and you have to leave the house, you can't leave your head in the sand. There's absolutely no reason in the world why you should let a bank foreclose on you and not allow you to sell that house on your own and take the check. You just have to beat them to the punch. If you know that you're not going to be able to make the payments, put the house up for sale, take the check, save your credit, and move on. So again, please share this video with anybody that you can. And if there's any questions about the market or real estate or forbearance or what services are doing or not doing, please reach out, 248-705-8431. Thanks and have a great day.